Thank you for standing by, and welcome to the Sandfire Resources FY21 Results Conference Call. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question via the phones, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Ben Crowley, Head of Investor Relations. Please go ahead.
Good morning, good afternoon everyone. Welcome to Sandfire Resources earnings call for the 2021 financial year. My name is Ben Crowley, I'm Head of Investor Relations here at Sandfire, and with me today I have Carl Simic, our Managing Director and CEO, Matt Fitzgerald, our Chief Financial Officer, and Jason Grace, our Chief Operating Officer. Today we'll have a short presentation from Carl and Matt, and then we will open for questions. With that, over to you, Carl.
Thanks very much, Ben, and welcome everyone, and thank you for joining us on the 2021 financial year-end results. And very proud to be presenting these results today with our CFO, Matt Fitzgerald, in what has been a record year across many key aspects of our business: record production, record sales, record profits, record dividends, and record cash at bank at the end of the year. So congratulations to the business, but also thank you to the CFO, Matt Fitzgerald, and his team for the completion of a wonderful set of accounts and the lodgement there today. If I could just touch on, before we get into the detail and pass to Matt, just our strategy. We are on purpose, we are on peace, we are on strategy. And our strategy and our purpose is to create value through opportunity for our business. Our vision is to build an international, diversified and sustainable mining company, and we are on a strategy to do that. We have 5 key elements. Execute delivery in terms of our delivery of operations at DeGrussa and Monty, and to build Botswana through that development and expansion of that Mateo hub in Botswana, so execute delivery. We plan to continue to look at building a sustainable production profile through our business development initiatives and our inorganic aspect of our business, and looking at business opportunities in a global sense. We will continue to be aggressive explorers, having spent in excess of $60 million last year. We have a budget of over $50 million Australian this year, and we will accelerate with accelerate that discovery with intent, particularly in Botswana, certainly in DeGrussa, around the DeGrussa and Monty projects, as well as for the first time since we've been invested in the USA, around the Black Butte project. So that will be a key plank for our business, and I believe we will see the fruits of the efforts that we are making on our discovery initiatives. We want to ensure always, and we're working very hard to ensure that everyone in this business in a global sense is aligned in terms of values and culture with our business, and we ensure that we use all our resources available to empower our people. And it's a constant work that we do, and we enjoy that, and we do believe that our workforce and our people are aligned with our business. We want to make sure that we continue to do this in the most optimised manner in terms of our capital structure, in terms of our management of our assets, in terms of our balance sheet, and ensure that we are engaging with everyone that is involved, our key stakeholders, and that we are clear and transparent to the market, and you understand what we are doing. So that is our background, and that is our platform. Just in terms of highlights, as I mentioned before, record high copper production and records across the table for Sandfire. A great year of production, and still very strong guidance for DeGrussa and Monty next year in Perth in terms of copper and gold. We also look to see, and likely towards the end of this year, the opportunity for the DeGrussa operations to transition into a gold operation, whilst we continue to look for repeat VMS deposits in the greater Dulguna region, in and around those excellent facilities that we have. And so therefore, towards the end of the year, we'll have an update with respect to our views on that gold transition strategy. We're working very hard in Botswana in terms of, as you know, we've completed the definitive feasibility study and pushed the button on development late last year, and we're full steam ahead in terms of construction and development, having also been granted the mining licence recently. And we do believe, with the work that is occurring with respect to the A4 resources, and we soon will have a reserve released for that satellite deposit, that we see the Mateo hub moving likely into a 5.2 million tonne per annum operation from the outset and ramping up to that level. That would change clearly the scale, and we also believe ultimately when that information is to hand and pre-feasibility studies with respect to an expanded operation, it will have a positive outcome on many fronts for that project and really lay the foundations for the next passageway of significant growth and value accretion for our business. We continue with extensive exploration as well in Botswana, and we're looking forward to update you with that as those results come to bear. In the US at the Black Butte project, we have a completed feasibility study, we do have reserves, and we continue to work through optimising the Johnny Lee deposit as well as putting together an inferred mineral resource for the secondary Lowry deposit and ongoing exploration in the area to enhance the value and the economics of that project and laying it based off the strong foundations that we have got there. And to wrap it all up, we've ended the financial year with some very strong balance sheet at over $570 million in the company. If we just want to just quickly touch on our sense and our view of the base metals market, and particularly in copper, we do believe the future and the prognosis for what has been a metal for many, many years is very much a metal for the future. And the demand for this product over the next multiple decades is looking extraordinarily strong. It is the third deepest market in the world in terms of metals. It's somewhere in the order of, in excess of $200 billion consumed annually. Underlying demand, obviously, for the primary construction and industrial sectors remains on foot and continuing with what will be an improvement in lifestyle for the globe, for the human race, for the continuation of urbanisation in many of the larger countries around the world, and obviously with the advent of the next push to a zero carbon emissions and the EV age, the demand prognosis for copper is very strong and it will continue to accelerate. Some of the major commentators in this area have provided their estimations that we could see a doubling generally of copper requirements in the next 20 to 30 years. Supply is constrained. There are challenges globally. So I think with the advent of the demand compared to the supply issues that ultimately we will see and continue to see a very robust copper price going forward, and we plan to be part of that development in this space. So thanks very much for listening to me, and I'm going to pass over to Matt Fitzgerald, the CFO, to run you through some more specifics regarding our financial results for the last 12 months.
Thanks, Carl. Welcome, everyone. Just firstly to briefly recap on the 21 financial year key physicals. So around 70% of ore feed came from Negrassa and around up to 30% coming from Monty in the 21 year, very much on plan. 1.54 million tonnes of mined and just a little bit more than that in terms of mill throughput. In terms of the financial results, that does drive an additional cost in the P&L between that movement in stockpile. 300,000 tonnes of concentrate and sales of just under that at 293,000 tonnes of concentrate. So effectively, or roughly about one ship short in terms of sales versus concentrate, and that drives a credit in the P&L. Between those, that cost and credit between the stockpile and the concentrate is what drives the changes in inventory on the face of the financial statements. As Carl said, very strong production, 71,000 tonnes of copper at nearly 40,000 ounces, drove a very strong C1 result. So between that high production and high gold credits, 82 cents US in terms of C1. A little higher coming into the 2022 year as guided on slightly lower production and also on lower gold credits. As we noted in the June quarterly, we did have a prepaid sales to a shipment that left in July that was paid for and prepaid in June, and that sits on balance sheet as a payable and is in deferred revenue. So that sits in cash in financial 21, but does not sit in revenue. So that has come over into the financial 22 financial year in terms of revenue. Sales for the year completed out of both Geraldton and Port Hedland, which continues to be a very strong asset position for us, having the two ports as options, And we're able to pivot, as we noted, during the year to a number of new customers and new markets as a result of the concentrate issues going into China. So we're very pleased to be able to easily pivot into those markets and maintain strong financial performance. Just onto the headline financial results slide. So those key production numbers have really driven a number of these. We do note that a number of these have been pre-released in July into the June quarterly, and they're now on an audited basis. So record sales revenue, 813 million, is up 24% year on year. Ebitda at Degrassa, 549 million, with a group Ebitda of 449 million. Net profit after tax, also a record $171.6 million for the year, attributable to equity holders. That's after, of course, depreciation and amortisation of 180 million. End of the year, up $282 million in terms of cash holding, $574 million. Cash flow, $542 million pre-exploration and evaluation expenditure across the group, and on a post basis, cash flow from operating activities up nearly $200 million to $471 million for the year. Very pleased, and I'll talk about this more shortly, but very pleased to have total combined interim and final dividend for the financial year 2021 of 34 cents per share, driven by a full year earnings per share of 96.3 cents. So clearly very, very strong numbers across the board, balance sheet and P&L wise. Just breaking up some of those numbers into segment Ebitda contributions. So you'll see on the left the revenue number 813. Degrassa's Ebitda from that 550. We do have the impacts, as we always do in terms of P&L. We expense exploration and evaluation costs, and we also expense study costs up to the point of the final economic assessment. So we do have an impact on P&L from Black Butte of 11 million, and of course Mateo as well, which are in various stages of feasibility study, drilling, permitting. At Mateo, clearly work on A4 and studies at Black Butte in terms of legal challenges, and some of that initial project work that we are doing in those jurisdictions. And then it's a bit of a catch-all in terms of exploration and other, which also includes corporate overhead of 71 million. That is really driven by that global drive across 4 key jurisdictions, 2 in Australia, 1 in the US, and also in Botswana and Namibia. And also of note here is our work on Old Highway, the Old Highway project as well, which is certainly in that evaluation stage, as Carl touched on, and we hopefully shortly be issuing our maiden mineral resource on that project. Group Ebitda, as a result of all of that, drops around 100 million in terms of Degrassa moving to the group. So 550 million moves to 450 million when you look at group Ebitda contribution. Looking at that year on year, as you'd expect, a significant increase on group Ebitda of around 135 million, almost entirely driven by revenue, which is clearly driven by strong copper production and also, as we know, continued strong copper prices. The revenue, royalties and gains also includes 45 million of dollars of QP gains during the period. And we guided that, certainly after our December results into the March quarter, that we were looking at that stage, looking around, projecting up to 50 million of QP gains. So that certainly came true. So 45 million of that increases on the QP side with a rising copper price, generally speaking, rising copper price during the year. Our operations costs, a bit of a catch-all as well, across exploration as well and operations, and supporting our expansion strategy, also supporting some of our retention strategies in terms of our workforce at Degrassa to make sure that we get maximum efficiency and financial output from Degrassa right up until the end of that mine life, currently projected into the September 22 quarter. Exploration and evaluation I've touched on across the various jurisdictions and also across Old Highway. And last year, just to note, we did have the impairment write-down of oxide stockpiles, which clearly we didn't have this year. So year on year, 315 million. Last year's group Ebitda, 450 million. Current year, 21 Ebitda. In terms of financial position, really the balance sheet is dominated by cash and no debt, so 573 million cash. Degrassa continues clearly to produce strong cash flow, and we plan for that to occur right up until that end date of DeGrussa. We are really positioned very, very strongly for growth, very much to support that strategy that Carl talked about. The financial management of that is a key pillar to how we balance that going forward in terms of delivering on our strategy. We also have financial investments of nearing $90 million on balance sheet. I mentioned the prepayment in terms of what sits there at 30 June and how that will roll into revenue into the new financial year. Of note, with such a strong result, we've clearly been paying tax during the year based on our monthly contribution payments. But given such a strong result, we do have a $57 million estimated income tax payable, which we estimate will pay in December 2021 when it's due under the tax return. $6 million of that has been paid in the month of July, but the remainder will fall into that December payment. So just important for cash flow, internal and also, of course, modelling externally. As we said, we've got a debt-free balance sheet. It sets us up very, very well for particularly the near-term and current development of Mateo in Botswana. So we've earmarked $160 million US as our contribution towards that, with the other $160 million US coming from a project finance facility, which we are very well progressed on in terms of looking at final term sheets with those banks. Putting together a very, very strong set of numbers for those banks, and also a very, very strong looking banking syndicate. So that will be some pleasing news that we can hopefully come out with the next couple of months to confirm that plan for Botswana. Our strong balance sheet certainly supports our ability to develop that project without having to over leverage ourselves. Pushing it clearly across Black Butte and Lowry moving forward in terms of drilling Lowry into a position that we're able to combine that in terms of a project assessment with Johnny Lee, and also, of course, our global exploration push and being able to continue to pay dividends to our shareholders and return this wonderful performance through to our shareholders at the same time. Looking at dividends, we're very, very pleased to record a 26 cent final dividend for the full year, for the final dividend, fully franked with a record date of 7 September 21 and a payment date of 22 September. That takes our full year payout to 34 cents per share on a 96 cent per share EPS, and that maintains a history, particularly recent history, of 35% payout of NPAT after tax, and just to note, continues us as a very strong dividend yield as well at 5%. And so able to do a number of these things, the project developments, as we said, being very, very managing very closely the funding mix of the new projects, particularly in Mateo, while maintaining our corporate flexibility in terms of being able to do exploration and really create some of that sort of extreme value that can come from exploration, particularly on existing projects and existing plants in terms of, say, DeGrussa and what we're planning at Mateo, and also some of that expansion capital where required. So balancing all of that together, and this year certainly has helped very much in terms of setting us up well for some of that growth trajectory that we are planning for. Just one slide to piece sort of the cash flow story together. 851 receipts from customers includes that prepayment, which came in June, as I talked about. That drives a cash operating margin for DeGrussa around 68%, $580 million. And this just breaks out some of where that sort of cash flow has gone. $282 million of it has clearly gone into the bank. So that is that in terms of increasing our cash balances year on year. But also in terms of exploration, the DeGrussa operations is really Australia in total. A lot of that, of course, is at DeGrussa, but it also covers the old highway drill out Eastern States projects as well. And really, as I say, covers the jurisdiction. Mateo, 18 million, we've talked about what's going on there in terms of exploration, A4, and other work and other study work to get that project up into really up to DFS level, or the remainder of that project up to DFS level. And then Black Butte project in the US, also the exploration and evaluation works and challenges that we are funding there, so that we can hopefully see that come into production in the next few years. Mine property and development, clearly important for us, particularly at DeGrussa. So DeGrussa's ore body development, and also at Monty, but Monty's is largely complete in terms of development. Mateo project, a very strong start, of course, to the construction of Mateo, and we hope to put out some more news on that and maybe show some progress also of that project over the next few weeks. And we're also planning, as Carl touched on, the A4 ore reserve and PFS, and we've noted in the announcement, and looking at combining that with a T3 feasibility study to really support, we think quite strongly, to support that 5.2 million tonne production hub concept that we've been talking about over the last year or so, and really sort of backfilling to that strategy and that vision of what we see happening at Mateo in Botswana. The Black Butte project is development, but also that the CapEx works that we completed at the back end of the last calendar year. Income tax I've talked about, payment of 40 million during the year. We have the remaining tax payable, which we'll make in December, as I said. Very pleased, of course, to pay our dividends during the year, and as I said at the start, really also building the cash position. So 282 million has gone onto our cash balance to set us up for future execution of our strategy. Back to you, Carl.
Thank you very much, Matt, and thank you very much, everyone, for listening. And I think just to highlight, off the back of those very strong results in the last financial year, it really, and with all the hard work that we have done with respect to refining, resetting and resculpting a very much an aspirational strategy for our business, we feel very pleased and comfortable that we are on the transformation of our business into an international, diversified and sustainable mining company. And we're being very strong about that vision that we have and the strategy that we have got, the key pillars to, and that we are presently executing. So we're well on the way in terms of that strategy. We have the resources and capabilities in terms of the balance sheet, in terms of the people within our organisation, the increase and the hard work that we've done in terms of our systems, our structures, the talent pool within the business, with a number of key people that have joined our business over the last 24 months, the last 12 months, the last 6 months. And we've made announcements with respect to that. So you can see that we're working very hard to position ourselves. We see very strongly an expansion in the Botswanan province. We are a significant footprint holder. Once again, I highlight the fact that our neighbour in Botswana, who is in production at the Khoemacau project, has a resource of some 6 million tonnes of copper. We have significantly a greater footprint, and we believe the geology is just really untouched in terms of its opportunity. So I think there'll be significant ongoing, and we see the prospect for Botswana to be a multi-decade, multiple hub style of operation. So I think it just takes time, but you need to put down the right foundations to build there, and we will continue to do that. So we continue to work very hard. We believe we've got the right and the strong foundations, have a strong pipeline. We're very much attuned to where we want to go to, and we're very excited and motivated about that. And we do believe it is very much a platform to create value or growth, and then value for our stakeholders that are aligned with us. So thanks very much, everyone, for dialing in and listening to this year-end financial results. I will throw the floor open to questions. You have myself, you have the CFO, Matt Fitzgerald, and you also have Jason Grace, the COO, as well as Ben Crowley in the room. So look forward to your questions.
Thank you. If you'd like to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star then 2. If you're using a speakerphone today, please pick up the handset to ask your question. The first question comes from Peter O'Connor from Shaw and Partners. Please go ahead.
Good afternoon, Carl, Matt, and Jace. A couple of questions from me. Firstly, the studies that are coming up that sound quite timely this year, the Old Highway and also A4. When should we expect them? You talked, Matt, imminently. Is that this coming quarterly, or is it this half, or when should we expect those two announcements?
All right. Thanks, Peter. It's Jason Grace here. So firstly, start with A4. We're at this stage at the moment putting the finishing touches on a pre-feasibility study for A4. So we expect to release that in the coming weeks and probably before the end of September. And then Old Highway, that's well advanced at the moment. resource models at the moment. We expect to have some announcements potentially going out over the next 2 months on that as well. In terms of completion of a feasibility study for that, that's likely to be, as Carl said, around the end of the year. So probably public reporting on that early in the new year.
And the fees on A4, given it sounds like the PFS is coming out in September, would we look sometime mid-next year for the feasibility to be completed?
No, we're really excited about the prospects of that. You know, Matt touched on it. We are full on. We are actually fast-tracking that as quickly as possible at the moment. I expect at the moment that we'll finalise that around January and probably looking to get it out in the market quickly after that.
Okay, so January calendar year 22 and soon after release of the feasibility.
Correct, yes.
Okay. Any updates? I know we asked this at the last quarterly, but the Botswana government stake, can you give us any more guide there? Is there any more developments?
No, that's still being evaluated by the government. We've given all the information that to the government that they require to do their evaluation. So we are waiting on that at the moment. So we don't have a specific timeline, but we'll provide further updates as it comes to hand.
And Matt, if I could ask you to think over the next 2 or 3 years as we try and map out your company's balance sheet and your funding, given the different moving parts, net cash now, project facility in Botswana, how does the balance sheet look over the next couple of periods? Do you have a capital management structure where you'd like to stay in net cash to maintain liquidity? Is there any other kind of guidelines or rules of thumb you could give us as to how to sort of massage the cash flow and balance sheet over that period of time you're doing major spend?
Yeah, really, Peter, we're concentrating mainly on impacts of Botswana at the moment. So we start with our cash position, no debt, which is obviously an easy place to start. We, as I said, really looking at a 50-50 contribution towards our equity contribution to Botswana and also that project financing. I think as a group that'll still set us up with very low leverage levels and set that project up very well, particularly given that assessment is on a C3 basis really. And what we're looking to hopefully add very shortly will be A4 on top of that, which clearly you'd expect would be superior economics. So really that's our concentration at the moment. We haven't set our real balance sheet, future balance sheet type targets in that way. That'll very much depend on how any other activity goes, whether we have other transactions or other consolidations or other expansionary type capital. But at the moment, we're happy with where we sit in terms of our capital management.
Just 2 follow-ups on timing of that facility. Could you give us a guide? And secondly, as a banker, do I want to wait for A4? And is that why you're fast-tracking it for early next year release to try and give bankers more confidence, potentially getting a better coupon because of that?
So the short answer is no. So we're fast-tracking it because we're excited to build a 5.2 million tonne per annum operation. So really the fast-tracking doesn't have anything to do with the banks. The banks are more than comfortable if they sit on a term sheet based on T3. It's got strong economics. They clearly see the upside of A4 and exploration, but no, it's not as a direct result of that.
Okay. Thanks very much, Matt. Thanks, Chase.
Thank you. Once again...
Sorry, I should add, you asked about timing. So the bank term sheet process is over the next couple of months, and then we'd look to draw down on that facility in the first half of next year.
Thank you. Once again, to ask a question, please press *1 on your phone. The next question comes from Sophie Spitalis from Bank of America. Please go ahead.
Good morning, Carl and team. Just a couple from me. Just firstly on slide 9 of the presentation in regards to the higher corporate costs, employee benefits and admin expense. We've seen a nearly $19 million increase in that to support the strategy. So we're at nearly, 70 million in FY21 versus 56 million or so in FY20. Can you just talk around how that looks as and if DeGrussa extends, and what we should be thinking sort of around that 3 to 5 year horizon for your corporate costs, please?
Yeah, sure. Sophie, Matt, really the operations costs are driven sort of in two parts. One is about expanding some of that group and certainly some of the overhead in terms of an international expansion and setting ourselves up for that. And we tend to hold those costs in those areas rather than directly to too many projects. Really, during year on year, we have seen an increase in employee benefits costs. So year on year, it's about $5 million. Part of that is some provisioning, so not in cash flow, but provisioning for some retention schemes that we have in place at DeGrussa, as I say, to keep that efficiency and financial performance strong right to the end of DeGrussa's life. We've also seen some cost pressures, as many would know, around freight. So the global shipping industry is seeing some market increases in terms of freight rates. That's about another $6 or $7 million in there. So there really is a bit of a blend in terms of that increase year on year. Mine operating costs in terms of direct costs outside of people generally are fairly consistent though. Over the next few years, I would expect our overhead to increase, our sort of headline overhead to increase by about $4 or $5 million a year, off what is still a pretty low base industry-wise. So if you're picking, say, 10, maybe it becomes about 15. Post that, over the next sort of year or two, it really depends on the execution of our strategy and where we operate. But in an overhead sense, it will cost more, of course, to operate globally, but we'll continue to control that as best we can. As I say, we are coming off a pretty low base in terms of our corporate overhead, which has largely been in support of DeGrussa. We are also running a decentralised operating model at those international centres, so there is naturally some overhead that sits in each of those areas that we accumulate into the group.
Okay, that's very clear. So just in terms of DeGrussa, just given the uncertainty against the backdrop of labour pressure in WA and the employees wanting certainty, you talked around sort of $5 million in retention costs. Can you just talk about how you're managing the workforce at DeGrussa, given you've got potentially Old Highway coming in, and then beyond that, the future is relatively unknown or dependent on further exploration upside?
Hi, Sophie. It's Jason here again. So look, we've got a very engaged and really quite a loyal workforce up at DeGrussa. But we're not naive that there is a mining boom and pressure on labour in the industry at the moment. We've done a number of things there. So firstly, if we touch on Old Highway, we are trying to push that as hard as we can. And we expect to finalise that feasibility study very early in the new year, as I said before there to Peter. And what we will have then is a line of sight on what the site will do and our activities levels on that site going beyond mine production at DeGrussa and also at Monty. So that will go a long way to give our workforce certainty. In the meantime, we are doing a lot of work, and particularly with our global expansion, it does provide opportunities for internal employees, and we're trying to do that as much as possible. And at the same time, Matt also mentioned there as well, we do have a retention scheme that covers all of our direct employees up at DeGrussa that makes sure that they will be rewarded to actually be loyal and stay as long as possible towards the end of mine life.
Okay, thank you. And then just the final one, any updates at Black Butte?
No, Black Butte at the moment. So we are working away on optimising the feasibility study for Johnny Lee. And at the same time, we've actually in the process of mobilising 2 diamond drill rigs. So one is currently arrived on site and we'll be drilling away. We're doing 2 lots of drilling, or if you like, 2 programs. So firstly, we'll be resource drilling at the satellite Lowry deposit that we announced a mineral resource on earlier in the year. And we'll also be doing near mine exploration in an attempt and also in a concerted effort to actually lift the value of that overall project and certainly boost the business case for us to look at the green light on that at some stage in the near future.
Okay, that's great. And then just, Carl, one for you, just in terms of the number of fingers you have in some of these junior companies. Can you just talk around the future strategy there, please?
Thanks, Sophie. Look, I think what we did recognise some time ago when we were embarking upon a strategic drive of a certain criteria of assets, we did identify there are a number of what turned out to be smaller opportunities that became quite valuable that we chose earlier to not invest in. And consequently, we changed our view of sense that we would be prepared to invest some monies in smaller situations and they might grow into something bigger. So it was to just have a toe in the water on some things. Clearly, one of them was our investment into Adriatic, which turned out initially as a $2 million investment in their IPO. And we've continued to increase that position slightly and also to maintain on a non-dilutionary right that we have now a 16.2% position and we are its largest shareholder. And as Matt said, in terms of those other investments on the balance sheet, the largest position would be Adriatic, probably valued at close to $80 to $90 million or thereabouts, I suppose, on the balance sheet at market today. We have a couple other really minor positions, and some of those are as a consequence of being involved in some direct project expenditure, but the company's so small it actually needs a little bit of financial investment to keep it alive. And so we've had to take some small equity investments in some to keep the opportunity available to us in terms of a direct project investment. So we have a couple of those, but they are relatively minor other than, let's say, the Adriatic position. They're all relatively minor positions, but they really are about a strategy of having a closer access into projects. That's really the philosophy behind what we call Sandfire Ventures, which is a concept within Sandfire, to maybe not disregard or say no to something just because it's a bit smaller. I know a lot of things sometimes are small and they don't move the dial and you go, why would you bother? But I do think there is sometimes opportunities where you might see a green shoot and want to make a small investment. So Sandfire Ventures itself as a concept will remain, but we're consciously updating and constantly updating our analysis of the things we might invest in. So generally speaking, they'll be small and they'll stay small, but every now and then something might explode out of that and become significant, and it's really to sort of plant the seeds for that potential opportunity. But we're not ultimately looking to become a resource company, a company that invests in shares in other resource companies as a primary business. It really is to try and either get access to projects that we can then become key players in, or key owners of, or key developers of. So it's a potential avenue to access to projects that we could then ultimately develop and operate. That is the philosophy behind it.
Okay, that's great. Thanks, Carl.
Thank you. The next question comes from Hayden Bairstow from Macquarie. Please go ahead.
Yeah, morning, guys. Carl, or Grace, you're just interested to understand how Richard's going. He's been on the desk for a little while now, just whether the exploration around DeGrussa is going to re-accelerate, sort of targeting some potential new copper things that can maybe extend the life there. Just sort of keen to see how that's progressing. And then just on Old Highway, just sort of balancing that sort of ore feed as you get towards the end of DeGrussa by next year. So when does the mill basically turn off from copper, and when would you look at flicking it over to gold? Thanks.
How you going, Hayden? Firstly, start on Richard. Look, he's hit the ground really well and fitting in extremely well within Sandfire. One of his main areas of focus coming into the company was to really have a look at our exploration strategy in the greater Dulgunna region up around DeGrussa, and he's certainly neck deep in that at the moment. So we will be looking at revising that and trying to bring in some new thinking and a new approach to how we go about that. And we are in the early stages of making a transition over to that. At this point in time, we do envisage that we'll actually refocus our efforts particularly on nearer to mine, deeper structural targets, close to DeGrussa in particular. And a lot of the work that we've done historically is really pointing to some very prospective areas, potentially a little bit deeper than we have been exploring to date. So I expect that we'll be doing some of that work and having a coherent plan around that towards the end of the calendar year. But in short, Richard's fitting in really well, and I'm sure he's going to be a valuable member of the team going forward. In terms of Old Highway, in terms of transition from copper to a gold processing, potential gold processing strategy, we see our mine life at the moment coming to an end in terms of ore feed from DeGrussa and Monty around about September next calendar year, so September 2022. We are gearing up at the moment with the Old Highway feasibility study to try and bring on basically a transition or a potential transition to gold processing as soon as possible after that. Now, at this point in time, we are targeting to be basically almost on the date, but I would expect that this, realistically, it's within about 3 months of completion of processing.
Okay, great. Thanks, mate.
Thank you. The next question comes from David Radcliffe from Global Mining Research. Please go ahead.
Hi, good morning, Carl and team. So I've got some questions just around that slide 12, which is on the cash generation and investment. Firstly, I guess it talks to the 43.5 million invested in Botswana. Just really wanted to clarify, is that all construction spend and to be netted off the project capital expectations that we have? And then more generally, when we think ahead to sort of this year, maybe could you sort of remind us of the level of capital investment you're currently thinking about, obviously before the studies come out, and then how that's broken up. And so things like DeGrussa, I guess when you added it all up, it's about 60 million this year or just over. Or should we expect the same thing as an example for 22? Thanks.
I'll just touch on DeGrussa first. So Monty's effectively finished in terms of its major development. We gave some guidance in terms of at the June quarterly. So I expect we'll probably hit capex of about 40 to 50 at DeGrussa for the 22 financial year in its last year. In terms of Mateo, yes, the majority of the project costs sit in that 43 million. We'll provide an additional update in terms of the Mateo project. We target to do that at the same time as we look at the A4 ore reserve, because the A4 ore reserve will have the context of a potentially 5.2 million tonne per annum plant and a cut of those financial projections, and we'll also talk through capex and where we're up to in terms of capex. So that's a long way of answering your question, but yes, effectively, what we've put in terms of development and mine property and development into the 21 year is progressively coming off that feasibility study that we did and released on T3.
Okay, thanks. And then for Black Butte, you've obviously got exploration dollars, but then you had 8 million of additional capital last year. Obviously, you're waiting on approvals, etc. But should we assume sort of circa another 10 this year, or was that more sort of one-offs associated with the studies?
Probably just a reallocation more into the next year. So that Black Butte project included an early works program, which was just over half of that. So that won't obviously clearly happen into 2022. But into 2022 at Black Butte, we do have the planned drilling work at Lowry to increase our confidence and hopefully potentially expand that ore body, and also the legal challenge and other study work that we'll be doing at the same time. So really that'll just more be in the exploration and valuation area rather than mine properties and development.
Okay, thank you.
Thank you. The next question comes from David Coates from Bell Potter Securities. Please go ahead.
Morning, Carl, Jason and Matt. Thanks very much for the call this morning. Most things have been sort of covered off, but I just thought I'd touch on, I just had a question about the funding model you might roll out. You mentioned, I think, that you're looking at a notional sort of 50-50 debt equity split when it came to Mateo. Should we consider that as a model you'd probably apply to Old Highway and Black Butte as the time comes for those to be kicked off?
Yeah, thanks, David. You're correct. So 50/50 is the current plan for the Mateo development in terms of debt and equity. Old Highway will make those decisions when we've completed the study and looked at the economics of the project, and look at margins and whether there's any potentially hedging or anything else involved. But my expectation at this stage, subject to any of those thoughts when we get to studies, is more likely to be equity internally funded, I would think, at Old Highway, just as an early view. And at Blackview, a similar position, depends on the time, depends on the scale of the project. But if we're successful in getting Lowry into that assessment and look at a combined Johnny Lee and Lowry model with continued strong copper prices, then yes, I would think you would head down a similar model in terms of project finance. I'm not sure what that split would be at this stage, but yeah, something similar on a robust project in Montana. You would think we would take advantage of potentially having some debt leverage there as well.
Great, thanks. No worries, guys, and well done on the record result. Cheers.
Thank you once again. To ask a question, please press *1 on your phone. The next question is a follow-up from Peter O'Connor from Shaw and Partners. Please go ahead.
Matt, you mentioned hedging just then, and I remember you talked about hedging and the project facility in Botswana on our last call. Where are you at with that in terms of this advanced stage of discussion? Is hedging part of that, and what are your hedging currency rates, copper, or all the above?
Yeah, Peter, assessing hedging and any requirements in part of that bank process in terms of the term sheet. So nothing to talk about at this stage, but it's probably a project that, even though it's a strong and a robust project, I would think we'll probably have a level of hedging in that project. Whether that's required by the banks or not, we may well determine that that's a good step to take anyway as a company, so that one very much to be advised. There is the Mateo produces copper and, as you know, also silver, so we'd need to look across the two. Generally speaking, we're not a natural hedger of copper because we obviously have such strong beliefs in the fundamentals of the commodity, and hence our strategy. But we'll look at it over time with those banks in terms of needs. As I say, our internal hedging strategy may well be above and beyond what any banks would require there anyway. But certainly more news to come when we announce the debt package.
Okay, and back to A4, with the study, you talked about being excited and fast-tracking to get this out. Is the government also excited and fast-tracking in terms of their permitting, and where do they sit relative to your study timetable?
Yeah, so Peter, Jason here again. In terms of permitting timeline, so this, we've actually done some work on that already at the moment. So we envisage a full ESIA will be required for the project and the additional infrastructure that is required for A4. We've actually started that process already, and we expect a 12-month timeline on that to get the full permits in place. The other point to note is that we actually own all of the land on a freehold basis that covers all the additional infrastructure. So it should fast-track some of those requirements, and it's certainly at this point in time, permitting should be well and truly completed before we would look at construction.
Be a little bit cute, but feasibility study and all the projects going ahead before permitting, are you that confident?
Correct. If you look at this, the work that we did during early stage studies and we actually provided guidance to the market that we were looking at a capital estimate of around about $50 million or approximately $50 million US. And that doesn't include mine pre-strip, that's just for additional infrastructure. And it was looking at potentially increasing significantly the production rate in terms of copper, potentially sort of in that 50 to 60,000 tonnes of copper per annum range. So when you look at that at a high level, it's very, very robust.
Okay, thank you. And just the last one I've got to Jace, that transition from the Grussa/Monty to Old Highway, so you're talking about likely a quarter between the last copper running through the mill and then starting to get gold in process in the mill. So would we be looking at sales of gold at some time during FY23, or has that been too ambitious?
Look, we need to complete the work on that to work out whether we will develop the old highway project. But the concepts going into the study is that we will actually get it up and going to follow as quickly as possible the end of production out of DeGrussa and Monty.
Okay. Thanks, Matt. Thanks, Jace.
Thank you. At this time, we're showing no further questions via the phones.
Thank you very much, everyone, for listening today to our full year results, and thank you for your questions, your interest in the company, and we look forward to updating you with meaningful news to the market in the not-too-distant future regarding Botswana, the A4 reserve and pre-feasibility study and other meaningful information. So thanks once again for listening, and we look forward to keeping you up to date.